You have a long call position for the yen, despite just the relentless weakness that we continue to see. What do you see changing that short of, of intervention at some point, given just the widening divergence between the BOJ and the Fed?
Well, it's a difficult story, and as you know, at the start of the year, there was a big reversal in the market narrative regarding the yen due to the unexpected widening of yield curve control in December last year. But that story now is getting a new challenge. In our view, Japan's fundamentals are pretty strong now, and the service sector will continue to strengthen due to improvement in tourism in the remainder of the year. And inflation has been, outperforming the market's expectation for quite a while now. It's now above Bank of Japan's target. So when we reach that level of discomfort for central bank or the cabinet in terms of inflation numbers or the weakness of the yen, I think the most effective measure the Bank of Japan can do is to actually change yield curve control. And we still think that's not a majority position in the market expectation. So that could actually stabilize the currency value and actually start pushing the currency in the other way. The currency remains very, very cheap. And we do think in the medium to long term, it's more likely that the currency strengthens a bit against the dollar. And the Bank of Japan's policy change in summer will likely be a contributor to that.
On the divergence picture, but a different call, you're shorting the yuan. You see further weakness there. Do you see, I guess, imminent stimulus measures being announced?
So we think there will be additional stimulus measures targeting, household borrowing and the real estate sector. They already cut the benchmark rates, but they'll probably have to do more. The fundamental problem for China is that economic recovery is relying almost entirely on volume gains. In other words, real GDP. They are not using that cushion in inflation, and it makes sense for the authorities to actually opt for a slight weakness in the yen, and at the same time try to combine that measure with some gestures on the household deleveraging and also potentially medium to long-term reform. So that's still a possibility in our view, but for sure, they will have to keep the monetary policy easy for a while. And for that reason, we still remain negative on the trajectory of the yen.